All right, good evening, everybody. This is Monday, October 20th. Again, this is Titan Circle Forex Trading Study Group. My name is Dan Hanson. I'm your host for tonight. And I know there's a lot of questions going to be posted tonight, but one thing we'll do is we'll make sure we get in a little analysis of gold. I've been looking at a couple different things. I was introduced to something new this afternoon, like about an hour ago. Never heard of it, never used it, and yeah, it's something I have to investigate for use as a permanent tool. But I'm always open to that. So, without that being said, feel free to unmute yourself and ask a question, and I'll see if I can field an answer. Hey, Ron, how you doing?
Oh man, I'm good, buddy. Can you hear me?
You're loud and clear. What's your question?
No, I'm just driving. I'm driving. I don't have a question.
Driving. Okay, cool. That's all right.
Yeah, I'm trying to drive for the next stop so I can sit down and listen at what's going on with you, buddy.
Well, really not much. So, somebody asked how I was doing. I get very tired, so I got about an hour of physical endurance in me right now.
Yeah.
I go through all my treatments for cancer and stuff. But right now I'm feeling pretty good, and I want to see if I can field some answers, as well as give you guys how many of y'all have been experiencing on-off days? And
On and
you
off days.
on-off days where your accountant says, "What the hell are you doing?" Says, "What are you thinking?" So if you have had something similar to that, uh, thanks, Brittany. I'll do that. All right. Yeah, more often. Okay, gotcha. Yeah, you don't know how to trade anymore. Well, that's kind of what I wanted to start off with is why we're trading to begin with. Something simple as that. I know I can probably vouch for Miss Iris, and it sure hers is to make money. And
Yeah,
am I right, Miss Iris? Make money, right?
that's right.
All right. So what I started to look at last week was based on something G Money mentioned and something I've noticed. And one of the things I said, I'm sharing two screens today. This is just the trading view. I'm going to put it on. Let's see what time frame have I got I also have got my demo account set up. This is if you can see the GNT demo account, because this is where I practice all my trading. I do not trade with live money while I'm practicing a technique. It's part of my trading plan. So if I'm like I use the 1-2-3 strategy, which is when I get an impulse, wait for the correction, jump in and buy. So I buy from either the 78261, but usually from the 50 to the negative 272. If you can see from my demo account, that played out very well. So I had the small impulse down, came and retraced 78% and just sunk. So now you might be an alert saying, "Oh, buy, buy." Well, what would be the reason? Either a retracement. So right now I'm not seeing the buy indicator yet because I still think we can hit the negative 618, even though we tested negative 32%. I think we can go a little further. However, and this is just based on one simple impulse. And once it hits the negative 272s, that's a complete trade for me. So right now, the market's bearish. So I'd be looking for sells, not buys. If that doesn't make sense, just say so. So when I was talking to Miss Iris the other day, I had a strange thought. And I'm going to just run it by y'all today because I think it's important that we kind of get an eyeball on our trading journal, our trading journey. But the one thing I want to impress on a lot of people is that you don't have to make trading complicated. It's like you can get all these indicators from this person, that person, but still, if you're going to use an indicator, you have to practice it and use it every day, every day, every day, every day for at least 100 trades. Then you can get yourself an average about how accurate yours are. So my 312, I'm in 60 trades so far. Out of those 60 trades, I've made around 45 good trades out of that. It's not a bad average. Now, to me, that I forget what it was. It's a little over 50%. But I know, just like I said, just take an impulse, fib it out, wait for the correction, and then wait for as long as you know the direction of the market. So what G Money has taught us is to look at the weekly, the daily, the 4 hour, and then trading in the 1 hour and then the 5 minute. And I like the 5 minute because I can find trades. I can find trades on any time frame, but I don't have the patience to wait for a swing trade. I don't have the patience, and that's on me. But so I've adjusted my trading style to go with my lifestyle. So that's like one of the rules I have in my trade plan is I have a couple rules. I don't trade if I feel. So rules I play by. One, I don't trade when I'm sick. Like today, I'm not trading. Today, I haven't traded since last Friday, but I just can't. When I feel out of it, like I was staggering just to get to my computer the other morning, not because I was drunk the night before, it's because I was so exhausted from my test the previous day, I couldn't move. So I literally, it took like 8 glasses of water just to rehydrate my brain, get myself feeling to where I can move properly. And by the time I got that done, it was noon. So that's one of my rules. I don't trade when I'm sick. Second, I have a plan. And I stick to it religiously. And my plan is very simple. I find a high and a low, I fib it, and I make my trades based on where the market's at. That's why I like the 5 minute chart, because I can always find the 50% or 61% easier than I can on a weekly or daily chart. So yeah, it's just something I just do. I have a plan. I have a strategy. It's my 1, 2, 3 strategy. I have not changed that strategy. I still trade that strategy. I don't have a lot of indicators on. I just pretty much use a fib. I know where my support and resistance levels by looking at the previous week, previous day, and then look at the 4 hour and the 1 hour. And that's pretty much it. I mean, it's very simple. And then I just go to the 5 minute, fib my I trade on the 5 minute because I like intraday trading, or some people call it scalping. But if I'm going to scalp, I'll scalp at a rate that I'm comfortable with, not in the 1 minute. So I found the 5 minute works well for me. And you may find it different. I know Andy is a swing trader, so I'm sure he looks more for the 4 hour and above, which is great. And you could probably get your 1,000 pips, but all I'm talking about is getting 50. That's all I need. And it's interesting because I went through an exercise with Miss Iris the other day, which proved my point. Why you don't need a lot of pips to make a lot of money. All you need is a plan. Stick to your plan. Know how much you're willing to risk, and against what you're willing about what you're willing to risk. So we looked at a trade. So we look at the gold in dollars, right? Each dollar is 10 pips. So we look at $1, one whole US dollar, if I can type that in, USD equals 10 pips. And that's on gold USD, Euro USD, GBP USD, Aussie USD. So $1 equals every 10 pips. So what I found out, and it's very simple. If you make a one-to-one trade, you're risking 50 pips for $5. So you're risking just $5. We're risking a $5 trade. Risking $5 equaling 50 pips. And say you want to earn whatever it is. I can't think of the word now. Say you want to earn 3 times that much. So you say you want to earn 150 pips. So you're just talking about you want to earn $15 in gold. So a 3-to-1 trade is equaling $15 or 150 pips. So when you compare each other, you don't really have to worry about it. Now, you're going to risk, are you risking 1%, 2%, or 3%? This is where risk management is important. How much are you willing to risk on your total account in order to earn X amount of dollars? So even if we risk percent, we'll just go with 1% since it's simple math. 1%. So if you have a $500 account, so we're going to set that up. Where's my calculator? Our ATM candlestick, that'll work. So say we have a $100 account. We're risking 1%, and we're looking for a stop loss of $50, but we're looking at pips, about 50 pips, $5. So we're willing to risk $5. So we're going to be risking $1 to make $3. Pretty simple. So when they, and that's pretty much, that's the importance of, some people chase price when they see they're in red. But if you stick to a plan that says I'm willing to risk no more than 80 pips, and then I'm going to show you how I can turn this and multiply it 3 times, which is the fun part. This is where we went and we had 3 different trades set up. Or I set up 3 different types of trades. One with all with a 50 pip stop loss. And say our trade one, say our first trade was a one-to-one trade. So $5 to $5. So literally it's $1. So trade 1 equals $1. Trade 1, $5 trade. All we're looking is for $5 on gold. And how easy is it to find $5? Pretty simple. Just looking for a $5 move to earn $1. Now, say we do that at different time frames. Let's see. I wish I took a better note. I think I did. I can't remember where I put it. But anyways, Let's see if I can do so. Let's see if I can do that right. So basically, I set up
So
three.
Dan,
Yeah, go ahead.
are you are you using a point 0.1 lot size
0.01.
for that one
That's
point
1%.
0.01?
0.01 is 1%. 10% is 0.10, and one standard lot is
So point zero 0.01, so point 0.01 is representing $1 in on gold.
no, no. It's representing what percentage of your account are you willing to risk for 50 pips. That's where people get
Oh,
confused.
okay.
So I'm willing to risk $5 to lose. I'm willing to lose $5 or 50 pips on a 1% trade on a 0.01 lot size. I think that's like 10 cents. It's like $1 for 50 pips. So I'm willing to risk
Yeah, it's real
$1 to
low. I
lose
use
$1. I know it doesn't
That
seem like a lot, but I also have a rule of thumb. If I'm making, if my account has less than $500, I'm not risking more than 1%, even 1,000, I think. 'Cause I did it several ways.
yeah.
Dan on
So
that number one, add the
Yeah,
word
I
trade.
don't I
right. So when you see the points over, so you're risking 1% of your account. So 1% of $100 is $1. So you're risking $1 for every 50 pips, which is a $5 move in gold. And that's why I think people got confused because they think 50, you got to make $50. To earn $50, you'd have to get 500
mm,
pips in a trade,
yeah.
which is not hard to do
Yeah.
either.
I find it hard to like when you said you use a 5 minute time frame because you consider you're basically scalping. But okay, so you enter your trade. Are you immediately putting in a stop loss and
Yes.
a take profit at that
Mhm.
point?
Yeah,
And
mostly.
so do you just do
Depends on where I'm at.
and you
Uh,
usually do 50 pips?
50 to 80 pips is my norm.
Mhm, mhm.
So because I'm willing to risk 1% of my account if no more than
Yeah.
2%. Because
Yeah. I do the same. Mhm.
yeah, so I'm willing to risk anywhere between 1 to 2%.
Mhm.
Even with a $1,500 account, you don't want to risk more than 3%. And 3%,
Mhm.
you do that in 4 trades, you've already, even if they're small amounts, I did the math on 3 different trades with Miss Iris. I wish I'd got the notes somewhere. I might have them someplace. I can't remember what I did with them.
So 300 with a zero, a
Right, I
zero
would happen to do the
one,
math, yeah. And I was trying to see if I saved my
and
notes.
then you multiply the the
Yeah, I'll
pips
go into
count.
that calculation in a second, but
Okay.
it's pretty complicated. So if I do a 1-to-1 trade, it's pretty simple. For every 50 pips I risk, I'm gonna earn. I'm risking $1 to make $1. Okay, anything greater or smaller than that
Mhm.
will be a variation. So, like, say if you know, it could be anything. So right now, $1 is what I'm willing to risk per trade. So that's why I'm able to take 4 or 5 trades per day. Because I could get in 3 or 4 times with a 0.01 lot size. So what I did is I took a simple Fibonacci level, and I just set up something similar to this. Say my move was, I'm trying to find my move with an arrow. There we go. So I was looking for a move from here to basically here. So I know gold is going to at least come back to 61, 50, 382, 236. But I want my take profit to always be at this 272. That's my goal line. So my entries are anywhere from down here, this whole zone, all at 0.01. Where's my regular? Where's my simple? That's right. That's cool. That'll work. That's not what I want.
And Dan, do you enter based on the percentage strictly, or do you then look for an ETM entry candle?
I strictly.
Or do you just say, okay, look at, I see it's at 61%, I'm going in. Is that what you do?
No, what I do is I set up basically either buy limits, depends on where price is at. So say say price has already made its retracement down to here, and I missed that trade.
Uh,
So I have a buy stop up here at the 786, 618, 50, 382, and at 236.
oh, you just get them set up?
Yep, I would set them up. All buy stops all the way up. So, and my stop loss would be either at the 0, and especially for the 786. I know, so I'm only risking, let's see, so it's a 41.33, about 33, about $10, not bad. I'm willing to risk $10, something like that. Something like that. It says 17 pips, 100, but I'm just going by dollars, so it's so it is more than that. But it depends. Like I said, on the 5 minute, it probably won't be that high. I'm on the weekly, so that's a lot of pippage. That's a lot of range. So if I go down to the 5 minute, it's something to chart view. Now I got to find all my drawings and where I do them. Where did I put this? Where did I put this? Anyways, I gotta go back up to the weekly, reset it. That's fine. But yeah, it depends on but that's why I stay on the 5 minute time frame. So let me go down to the 5 minutes and we'll just do this example all over again. And that's how I base all my movements on. It's pretty much, I like the 5 minute time frame. You can do whatever time frame you like. I just am in because I know I don't have the patience to trade a long term. Like I can't sit in front of my computer during the whole New York session.
Yeah, I can't either because I'm working as well. So I'm really struggling right now with how I'm going to figure out really how to trade and
right.
get things set up because I
for me as well. Yeah, that's why I like the Asian session as well. So let me rules. Let me just move everything over here.
Then add the word trade in your number one.
Oh, pray? No.
Trade. Don't trade.
Pray, don't trade, you said?
Number one, your rule. Don't trade. You left out the word trade.
I'll get to it. Just give me a minute.
Okay.
Now I gotta find out where my notes are. They're not sticking where. Don't trade don't trade. So let me just copy this. I don't know how I can get it to the 5 minute time frame. I'll just have to walk it down. Where's my other note? Where's my other note? Here it is. All right, so when I get my button accurate, there we go. So now we can we'll walk it down because I don't want to lose these guys. Let's see, 1 hour. There we go. .5 minute. There we go. Cool. So there's my 5 minutes. Let's get these together. Reset my chart. All right. So what I did earlier is I just looked at this move from here to here. So all I did was on the 5 minute chart is just come on. That's one thing I don't like about the indicators slash because the indicators drive me crazy sometimes. Hide that stuff. They get in the way of your charting. So I just mark this chart. Go to my standard Dan fib levels. So there's my move. So what I was talking about is, so I just did this one move, waited for retracement, came back and hit the 786. That's why I know on the 5 minute, it always seems to work for me. Even on the 10 minute, on the 1 hour time frame, it still does, but it doesn't look the same, does it? Because it's a different, because I'm fibbing just basically these two candlesticks. You know, so that's why I like, you know, find my impulse correction, and then of course it took my take profit. Now it's trying to break the zero again to see if it can retest these lower levels. So my entry was in this zone right here. Right in here. This is my trading zone, somewhere in between here and here. I could also extend it down to here, but right now I'm just going for this. So my first entry.
When you say trading zone, the entries or
These are my zones
like,
I look for. Right. So these are my entry zones, I guess you can call it.
okay, all right. The entry zones, and then you set your take profit and stop loss
Stop loss is
from
usually
there.
the prior zone or a high.
Mhm.
So this will be my stop loss zone. I'll make that red, nice and red. And we'll call it our SL, stop loss. And then take profit zone is anywhere in the extensions. Take your pick. Anywhere from here to here. You make take profits. So even a zero is a good, so even anything above zero, if you think about it, even if you get to zero, you're good. So already if I placed a zero at 618 and traded to zero, I would have made profit. So the one I set was a 272. So I risked basically, let's see, so I measured from here to here. Basically, I just did the zone. I picked so when I set up the trade, I think I was looking at it right about this level where this BEC is at. So I was looking for like a retracement. But when I was looking at these two, my goal was to enter at the 618 and take it to the extensions. So my stop loss, so my setup would have been right when it turned around at the 786. What's my short position? So I would have set my first position here. So right now we're only talking about $7.79. So we're talking about 77 pips. Still within my 80. And that's basically a 4-to-1 trade. So, you know, for $33, but I went to the extensions. When I first was playing with this one, Miss Iris called me earlier today. I went and looked and set up these trades in my demo account. And when they took off, I set a trade here. So when that one kicked in, I had another Let me get that set up for you. So I set another one right here to 618. Again, setting the stop loss, not changing the stop loss in pips. And I think we just cleared it. I think it just cleared it by, just barely cleared it, but I would have made my extension at least to 80 or something like that, somewhere in between. I would pick this high candlestick to be my stop loss after I got in the first trade. So yeah, it's a little bit more dangerous, but it's a little bigger, but I wouldn't worry about it, especially since this one would have played out anyway. Then I just set up another trade, and all at 0.01, no more, no less, all at 0.01s. 50% level, again, right up to this level here. So I usually go to the previous level up or the nearest high. So either I hit the high here, the high here, the highs here, yeah, and so forth and so on. And you can have as many trades. So getting in 5 trades, just think about this, and they all took profit here. This is why that's where I think G Money is trying to get everybody to look at, is when you set up trades, kind of look at where you're at and what you're willing to risk. So this trade would have come in, so that would have been fine. 1, 2, 3 candlesticks. Okay, cool. So this entry would have kicked in on the way up, never came back and touched it. I'm cool with that. So there's 4 trades right now, just 4 simple trades. No muss, no fuss, and there's trade number 5. So if we measure, and if you don't change your stop loss from one level to the next, you're fine. Because you can always move your stop loss into profit once it hits that level. Once you're past it, you're cool. Once you're in profit, even if it get traded all the way down here to the 50%, you could buy your stop loss into here. So even if you lost in the next trade, you'd still be up in profit. That's where, this is what he was trying to get to, where you can start trading like this in increments. And just look at the, so here we are. So the first trade, somebody got a calculator. I'm going to spit out numbers to you. So trade number 1, we would have made $36.60 profit, or 36, yeah, in dollars. So we're going to dollars, okay? The second one, hope somebody's doing a good job at this because I suck at taking. And the second one was $31, basically. Third trade would have got 1, 2, 3. Whoops. Come on. Third trade. Come on, buddy. You know you can do it. Third trade would have been here. That would have got us $27. The fourth trade would have got us another $23. And the fifth trade would have got us to $18. Somebody got all that? What's the grand total?
$135.60.
$135.60.
Yep.
Okay. So multiply that by 10. And that's how much profit you would have for those 5 trades, that 1% risking 1%. That's how many pips we would have got total. Okay.
Mhm. Yeah.
Now we take that, we risk, say, 50, that $1. So divide that, would you divide that by 1? So we're risking 50 pips to make, how many pips was that? How many thousand pips was that?
It was 1356.
1300. 1356 pips. And we're risking 50 pips every time.
Uh-huh.
And none of them hit stop loss. Yeah.
1, 2.
So so if you turn that into dollars, so on what's 1% of that? What's 1% of that?
Of the 1356?
Yeah,
Oh, wait a minute,
it's 136, or is it $13.50?
1356.
$13.56.
It's $13.56.
So if you had a
$13.
$100 account, you would have made $13 for those 5 trades. Okay.
Mhm.
What percentage of 100 is 13? Is it like
13 of 100?
13%? 13%. Hey, my math does
Yeah,
work.
it's 13%, $13
Okay, so
on 100.
technically we could have made 13% per day if we done this trade. So here we go. This is where Iris and I had fun. We go to a place as any just computer. Let's see, we want a forex compound daily compound interest calculator. All right, cool. My fxbook.com has got a good one. So yeah. So if you, I'll put a link in the chat for my Forex Factory. I'll put the link in the group chat and the Zoom chat.
I think there's a Circle Markets. Is that another one that has?
Yeah, it doesn't matter which one you use.
Compound.
Doesn't matter which one you use.
Uh-huh.
As long as you're it doesn't matter which one you use. I just use my fxbook.com because I like it.
My FX. Is
Yeah,
that
I'm
what you
putting
said?
the link in the, whoops, wrong one. That's not it. It didn't copy. Hang on 1 second. Copy the whole link. Duh. Let's see, where's the chat group? Lots of chat group. There it is, chat. There it is. Yeah, it's my fxbook.com Forex calculator. So anyways, so say you do this calculator, this compound calculator. So we're talking about gain of 13% per day. There's 20 trading days in a period. And we're talking about a starting balance of $100. So you calculate that out, within the end of 20 days, your account would have increased to $1,052. $13 a day. That's why percentage. So that's why the 50, 35 pips, it's all valid. So you can make any amount. The number we used for that calculation was, I'll show you a link to that. Let me stop sharing this, and I'll show you the Forex calculator, because I thought that was fun.
It can't open.
So when you do these little things like that, look at, so we start with the $100 balance, 20 periods was 20 trading days in a month, 13% per day. Friday, you make those 5,
You open?
and if they all play out,
You click on that link.
you can guesstimate that you'll make
You didn't open.
at the end of profit $1,051.31. So those are things to think about when you're trading. So percentage is huge. If I could earn 10% a day, just 10% a day for 20 days, I'd be up at least, I would at least have 500, I would have made 5 times as much in my account. Of course, like I said, the 13 or 12%, 12%, the number we use. So in 20 days, you come up with $800. But 13, look at that. We could have made 13%. 9.01. That's if all 5 trades went off. And so say we won 3 and lost 1, we, the other one didn't kick in. Say it decided to go the other direction. 3 of them won, the other 2 didn't get kicked off or whatever. You're not out any, that's why a percentage, when we talk about percentage gains, like I can pay my bills. And I'm comfortable with that right now because that's all I want the government to know that I make.
Dan,
Yes, ma'am.
that link that you gave us, we couldn't copy it.
What's that?
That link that you just shared,
Yeah.
it won't let me copy it.
Then I'll put it in the our student trade circle too. I'll put it there as well. Making loss our study circle. But that's what I was getting at. That's why you have to have a trading plan and stick with one strategy. Like Ron, I know like to trade one G Money trade.
Okay.
Some people are better at scalpers and playing the 5-minute and trading on their phone. I don't. My phone is not reliable for making trades. I've lost more money than not because I keep seeing the red and I keep getting out thinking it's too early. But if I start my trades on my computer, I kind of just set them up and walk away. And I'm happy with whatever I lose. So I don't focus on making money. I just know I can make money. Yes, Anna, you got a question?
No, it's just I was agreeing with you about the phone. I can't use my phone for trading at all. I can hardly see to do anything on the phone as far as putting in a trade and stuff. I'm just not comfortable. I need a big screen.
Right. So what I do is I trade on the and I also practice this strategy on a demo account. Look at here. I put all those trades in from here all the way. Look at that, hit the negative 272. 1, 2, 3 times. So I knew just this one small impulse. I hit the retracements. So I went from
You can't say that, Jeff.
price level was.
Oh, yeah, you said.
That's when I find that I can't, unless your account's linked to TradingView, I look for my 5-minute time frame on the so I'll go back and I'll stop this. That's why I said the 5 minutes to me is perfect. So what I do is I go back to my TradingView, go to my 5-minute time frame, which I'm not in yet, but here's my 5-minute time frame. Reset my chart view. And then what I do is I turn on my boxes. And it didn't have quite this, but this is when I got it. I saw it was back here. So when I looked at this, what time was that, Ms. Harris? You called me about 5 o'clock this afternoon. That's when I saw this particular movement. So I was like, oh, okay, cool. I'm happy with that.
I'm not seeing your screen.
Oh, did it not share? Oh, let me get back to that
No.
again. Crazy, crazy, crazy. There we go. Boom. There we go. Now can you see it? There we go.
There it is.
Action bar. Let me take it back to 17. Right about there. So there was my impulse on the 52 box when Miss Iris called me. So I came to my computer to turn it on just so I can get ready for his call tonight. So I set this up, looked at this, and I go, what if? Because I'm looking for sells. Even though everything says buys, I decided to go for this last impulse on the 52 because I wanted it to finish out for 2 reasons. If you see that the 17 box is just above the 52, so it's still showing bullish. And it's still above the 204. I was hoping that we catch this little drop base drop down here. A rally base rally right down here. Teeny weeny. ETM demand zone. 5 minute RBR. So just on a 5 minute basis. So I was looking for that particular move based on my impulse of the 52 box. That's why it got confusing to a lot of people, and that's why I think it got confusing to me even when G Money was explaining to it. RBR. So the 52 box is not the structure. Structure's on the 100 box, 204 box. The momentum is based on the 17 box, which is the tiny little one, and I think they're about the same height anyway. So they should be just about even. So the 52 midpoint is at my 50 point level. So I'm looking for the retracement to come back and at least touch, if it's going to continue going up. And that's when I started saying, okay, I'm looking for this move, and this move. I just started lining them up to go to these red and blue zones because that's what the indicator is showing. So even if we took, or there's the extension on this one, I just went all the way down. So I set the first one there, just above the high, and so forth and so on. I just kept the same stop loss, which was about somewhere around $99, something like that. Just something simple like that. I went a little bit above price, just so I don't mess up. And I just did the control and just dragged it down, readjusting each one. So each one, as time came back, I wanted to see which ones played, which was interesting. I just started setting them all my little soldiers. Just setting them up. Whoops, that's too far. Missed an entry. Of course, I want to get and then I just, again, kept just moving them over, not changing my stop loss, keeping the same take profit. And this is how I practice my strategy. And this is how I perfected the 1, 2, 3 strategy. So here I set up all my trades ready to go because I'm expecting price to now retrace to either, if it goes up and takes me out, I'm only out $9. Or if you put that, so 90, so if I change my calculator to be 90 pips, it'd still be 90. What's 1% of $100? So it'd still be a dollar on 90 pips because I would make it a 90 pip stop loss. Okay, so then I just let it play out. And I saw it starting to go down. Was it ever going to come back and hit it? Didn't know. But then I saw, just let it ride out, see if it was going to. So one kicked in, the 236. That one kicked in. But look where price jumped to. Just in that 5 minutes. Price just jumped when the Asian market opened at 5 o'clock Chicago time. The opening just shot straight up already into my entry zones. Cool. So I was expecting, well, these guys kicked in. If I lose, I lose. I'm cool because it's still 0.01 each. So the most I would be out is maybe $20. Okay. If that. And I just kept playing it and just seeing what happened. There we got, and here's where I was thinking of getting out of the market. Did I make the right choice? But it hit my first one because that one was the one I set up first. So it hit that one. Second one, so they've all kind of played out. But notice what held, the 786. That's kind of like the 23% of this whole box going the other direction. That's why the 786 and the 236 are very important levels of support and resistance. So now I've got some momentum to the downside. We didn't quite make it above the 786. We whipped into it. I'm cool. I'm still in it. Happy little camper. Now my 50 is still in it. My 382 is still in it. Yay. I'm still kicking butt. Oh, look at, I might be out. And like I said, just let it look at, see how the momentum changed from bullish to bearish, because the midpoint of the 17 is now below the midpoint of the 52. That's when I said, okay, I'm happy. I'll keep my trades. I won't close them. I'll just let them play out, and bada bing, bada boom. I just don't see how none of them ever came back and retested the previous support and resistance levels. And they just kept boom, 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 boom. Because the one thing that happens is they all merge together to that original stop loss point. The first one you put in, when you place your trades, so that's why you can adjust your stop loss and bring it down into profit. And that's what's really cool. That's where you have that flexibility with MetaTrader 5. So here we're at the 382 level. Okay, we tested the 50 again, failed. Boom, boom. Oh, we're gonna no, we're gonna come back. Are you kidding me? So we're still, so don't forget, stop loss is still at like the 0 level. Even though they look like they're already broke profit, because again, the stop losses will stick to the first one you created. And I just let it play out. Bada bing, bada boom. Here we go. Down to the races. Took profit right on all 5 of those trades. And how long did it take to get there? It took from here. It took basically 3 hours and 15 minutes. That's why I don't trade on the 1 hour frame. Go ahead, Anna.
Okay, so you're saying you didn't get stopped out on any of those? All
No,
5 of
because the
those
original
played
stop
out?
loss, the first stop loss you enter is your stop loss for every single trade moving forward. So my stop loss would have been back here, back here, back here. They would
Oh,
have
I
been
see.
all the same level as that.
Oh, I see.
Right.
Okay, because I was looking at the
That's why I
stop
said
loss
don't pay attention to these other stop losses, because it stays with the first stop loss you enter. And it's
Okay,
above the stop loss
so
until you move it up in the stop
so
loss.
your first one was what? 90 pips. So then the other ones are greater than 90. Is that what
Correct.
you're saying?
Correct. So if they all stopped out above the 0, like say it just went the other direction, that could have been a big, so it would have been a buck, 2. So this would have been how many pips? So 15. So in other words, yeah, it could have added up to quite a bit of money. But the thing about it is, you can
Yeah.
always move your stop loss up as you hit a previous. As soon as you get past this level, retest it, you can bring your stop loss into profit. Same with this one, you could bring it down to this level. You can just keep moving your stop losses as your trades keep going. Once you pass a level, so once this level broke and made it past the 618, I figured, oh, I can start bringing my stop loss up to that level. In the meantime, these other trades are still in profit, so they're all in profit. And then by the time this trade played out, this last trade, boom, and there you would have,
Yeah. So you really do you kind of have to watch this type of trading
right.
when you have like 5.
Yeah, that's why I said it's a certain stop loss. Or you can set a trailing stop loss to 50
A
pips.
trailing.
A trailing stop loss is MetaTrader 5 allows you to do that, where it'll, like, if price retraces, I think you can like I would reset 90 pips as my you know, but that can be dangerous too. You know, trailing stop loss, you know,
Mhm.
the brokerage firms all look for that. But, you know, since I saw the 786 held several times, I would just move my stop loss to 786 or just slightly above it for, you know, just moved it up a little higher, just to be on the little safe side, that kind of thing. And there's stuff like that. Those are things you can, that's why if you're watching your trade, you can do that. And even on these trades down here, I would have 786 was good because you know, we could have that retracement. So look what stopped it. The 382 stopped it, but the 618 kind of held it. It didn't go past the 786. It tested but failed. Then it came back up to the shot past to the negative 382 and then started doing its retracement. And it just kept doing that the whole time. And, you know, it just, you know, the negative, then it just kind of petered out, but never went really above the 236. So even if you got into 236 to the extensions again, you would have won. Look at that. Boom, you're done. You know, you hit the 272. So even that's a lot of money just from the 236 to the, just from the 236 to the 272. $17.17. So you're talking about 177 pips.
170.
Yeah. So you're still making a good profit. And even if you set your stop loss at the negative 382, which is only 48 pips or 50 pips right on a button. As I say, you can do those kind of things. So if you're in a trade, you know, you can do those things. See, how it never even came back and retested this. Well, I kind of retested this rally drop base drop here. And that's where it's really cool. Here's our drop base drop zone right here. Supply zone. 5-minute drop base drop. That's why I like the 5 minutes more than any other time frame, because those movements show up easier for me to see. And I can feel more comfortable trading. So 3.5 hours to sit in front of my computer would have been a pain in the butt. However, I knew my high was going to be at least 786, so I just let it ride out. And if I lost a trade, I'd still lose a trade, but I wouldn't be so upset about it. Because even if I decided to, when it hit this level, like the 236, I could have taken a partial close and kept the other ones open. So there's ways of doing that while you're trading. You could take out like, so that'd be 3.01s. So I could have taken 0.03 off the table and taken profit on 0.03 movement, you know. So that would be from the, so I would have taken the profit from the 786 to the 236. That's right now is almost $19. That's 190 pips. I can live with that. Yeah, I can live with that. You know,
Yeah, I'm going to need to practice. I'm going to need to practice this multiple trades, because
this is something you definitely have to practice. That's why I practice on a demo account. I never practice on my account. So going back to my crazy little rules here. Where are my little rules? Let's see, where did they go? I know they hid somewhere around here. Where are my rules? I know you got to be around here somewhere. There they are. So I don't trade when I'm sick. I have a plan. I stick to a time frame. So my plan is to spend no more than 0.05. It should be 0.03. But on a trade like that, since I had a good feeling that I was going in the right direction, yeah, I would have risked the 5%. I'd have risked $5 to make whatever amount I would have made.
Are you gonna correct
What's
your
that?
rule? Correct your rule.
So my rules are I don't trade when I'm sick. I
Yes,
have
the
a
trade.
plan. Now my
Yeah,
plan.
she's just saying you didn't put trade on number one.
Oh,
Just
okay.
you
When I'm
have
sick,
don't
I
and
don't
I'm
trade
sick.
when I'm sick. I went to put that. Okay. Thank you. Trade when I'm sick. I have a plan, which is my 3-1-2 strategy or 1-2-3 strategy, whatever the 1-2-3 strategy. So the reason why I did it in those 5 positions, because say I missed the first one, say I missed the 7-8-6, I still got the 6-1-8, the 50, the 3-1-3-8-2, and 23%. So I would say if I missed the other 2, I still got the other 3. So I just give myself enough room to play with, and of course, I always do the top-down analysis. I'm going to make that number 3. Top-down analysis, same thing that G Money does.
Did you get it?
And you all know how that one works, right? Everybody knows how to uh
The high and low,
what's that?
the high and low,
Mhm.
you find your high and
Weekly,
low,
the weekly high and low. Mhm.
and then you
Weekly, daily, 4 hour, 1 hour, right?
Right. Mhm.
and you fit it.
So what I want to do is I want to get a nice screenshot of this so I can share it with you guys. So we can all have something so kind of know what we did here. I can even do it this way, right? Will this work out? Let me change these to a different text color. I change that width, that width, and this width,
Mhm.
and take profit. Zone. I'll put that in black. Change that color to green.
Good profit, right?
Entry zones. I'll change my text to black so you can read that.
Take profit. Profit spelled wrong.
So my stop loss zone never changes, pretty much.
No, the word profit is that project.
Yeah, I know it's spelled wrong. It's ProGet. ProGet. You know, I saw it after I typed it. That's why I have an editor. So these are pretty much what I work with. I don't work with too much more than this. And I'll give you a small screenshot of that. Save this chart. Publish that. Let's see. We want I'll do the image and I'll put it in both places. I'll put it in our Zoom chat. I can find the Zoom chat. There we go.
I
Put it
still
there, and
can't
I'll
get
also
that
put it in our
calculator.
WhatsApp chat. And is Wednesday also a good night for some of y'all? 'Cause I was thinking Wednesday or go back to Sunday night, so I just don't know. 'Cause although yesterday I couldn't have made it anyways, I was so exhausted from my trip on Saturday that I had no energy. But I feel any other questions or thoughts before I shut us down? At least stop recording.
I just can't copy that calculator. It says Safari cannot copy it or something.
What's that?
When I try to click on the link for the calculator,
So if you can't, I'll text you the image or I put it in the WhatsApp group.
I did that too.
If it won't let you open it on your computer, then
It's on my phone.
think about I can text it to you, email you the image. I don't care. Oh, you're welcome, Donald, anytime.
Okay.
Hey, Tina, how you doing? Come in.
Oh, so I'm getting a message on my phone. It says that it can't open the page. It can't find the server or something. That's what's saying to the link that you sent on the
Oh.
WhatsApp.
WhatsApp. I only sent the image. I don't think I sent a link. Or did I?
Well, there's a link here. Let me see this image. Okay, so the image came through. There was a link that you shared earlier.
Yeah, one of the link, like the link.
The image is fine.
Yeah, my Facebook one. Yeah, that for some reason didn't like it. I don't know why it did that.
Yeah, the FX book. Yeah.
Yeah, that's.
Yeah, the image is good, Dan. Thank you.
Yeah,
I
I'll
don't
get
have
rid
the
of
image.
this
The
one.
image here. I don't have the image. Where's the image?
So I'll delete that one. I'll get my Facebook calculator back out and add that to the. Oh, that should work. Oh, I see why. I see why I create. It's a crazy link. It's got an exclamation point before my FX book. Oh my God. And it didn't treat it as a whole link. Oh my God. That's why it didn't work. Paste. Yeah, I see why it didn't work. Yeah, it doesn't like that exclamation point. So all I have to do is I'll find another one that's better. It's not as pain in the butt. Let me see if I can find another Forex calculator. I don't like that one. Let's see. I know there's a bunch of them. There we go. I found another one. Let's see if this one goes better. Copy that one. Let's try this link. See if this one works. There you go. That one should work. And it's for fxverify.com. It's a compound calculator. Same thing. You just put in the put in your dollar starting balance, number of periods,
You get
percent gain.
it.
I read it from there. Any other quick questions?